Good afternoon from Los Angeles and happy Friday. It's Alissa, Coram, and Ken Shreve here with a look at the stock market today. And on today's show, we're taking a look at the action for Amazon, Zscaler, and more. But first, let's check in with the major indexes, finishing the week on a high note. The Nasdaq finishing up about 0.8% at session highs. The S&P 500 up 0.7%, and the Dow finishing the day up 0.4%. So a strong session to cap off the week.
Yeah, absolutely. A close near highs, it looks like, and we've been talking about multiple closes in the row for in a row for the Nasdaq Composite above the 7,500 level, so that's good. Saw a little bit of softness earlier in the session when the Institute for Supply Management, they came out with their manufacturing index. That was a little bit soft. Stocks came in off highs, but we've rallied nicely into the close. So double-digit gains for the major stock indexes to start the year, and another good session today.
Yeah, I can't really complain here. And taking a look at Amazon shares, rose some 2% today in below average volume here, but moving on news that it has plans to launch grocery stores that would have a wider availability of products than what are currently in its Whole Foods stores, which it's already really utilizing in a lot of its plans. It's same-day delivery and things like that. So this could be a threat to those other grocery competitors. Kroger down on the news today, and we could see the first store here in LA by the end of the year.
Yeah, so interesting news from Amazon. Kroger did take a hit on this news, down about 4% or so, but like you mentioned, kind of lower price points than their Whole Foods locations, but we'll see where it goes. I think they're going to start slow to start, and we'll see where it goes, but kind of interesting news from Amazon. A lot of people wondering if this stock is going to be able to be a market leader again. A lot of the FANG stocks have been struggling. This is really an example of kind of what a tired stock looks like. You see it's been getting some resistance at its 200-day moving average, that black line there. So Amazon definitely a laggard at this point. We'll see if it start rising in heavy volume again.
That's right. It's been moving sideways while the overall market has just been tearing higher. So the relative strength line definitely lagging here. And as far as what we would want to see next, you mentioned that 200-day line. So that's the first hurdle. And Amazon's still well off of its all-time highs. Yeah,
I mean, you can see when the stock hit a high of 1736 several weeks ago, it really got turned away quickly at the 200-day moving average. So you mentioned a lagging relative strength line, even the relative strength rating of 46. This is just pointing to a stock that has really started to underperform the market. So not likely this is going to be a new leader anytime soon, but I think that is the case with a lot of the FANG stocks at this point.
Yeah, well, we'll have to see if those grocery plans can help boost the stock a little bit. So that'll be yet to be seen. But we did see a big move in Zscaler today. Another name out of the software space doing really well on its earnings report. A big gap up of 22% again there in heavy volume today, and this is pretty much a runaway stock here now after it already had some pretty big gains here so far this year.
Yeah, the good thing about Zscaler is that this is still an early stage move. So this was a breakout from a first stage consolidation. Had a really good close for the stock. Looks like it's going to close above the 60 level. It had been kind of hugging the $50 price level for some time.
Right.
This company, they reported an unexpected profit. First of all, 9 cents a share versus an estimate for a loss of a penny, and a nice revenue acceleration again, third straight quarter. So this really does have the look of a new emerging leader in the security software space.
So, a lot of times this earnings season, we've been talking about stocks that have been hovering near buy points before earnings and then breakout. This one was already extended. So does that change perhaps how you would have handled it, or is the gap up itself something that you would want to be interested in?
I mean, the gap up itself was a sign of strength, a sign of power. This was not the cleanest of charts. There were a couple, maybe arguably some early entry points, but if you look at the left side high of 48.24, add a dime there, make it 48.34, it really wasn't all that extended headed into earnings. Either either way, the open price today was a legitimate entry for the stock, and most importantly, this is was a really powerful breakout today from a first stage consolidation, as opposed to a third or fourth or later stage base.
Yeah, well, I think that goes to show you how you can look at charts multiple ways. We have pattern recognition on here showing a cup with handle with an earlier entry around the 44 level, but as you said, looking at that prior high of resistance level above 48.
48.24.
So yeah, you can look at these a couple of different ways. Of course, that if you were buying at that handle, that breakout there quickly failed. So the 48 level, a better resistance level, it looks like.
Yeah, and clearly the open price today and the way the stock traded, there was a pretty heavy institutional buying in the stock, and the fact that it's a first stage breakout, look like a good buy today.
Yeah, and we want to give a shout out to our stock of the day, Live Nation, which gained 8% in heavy volume, breaking out of a base in a base on base pattern, I guess you could say, that relative strength line hitting a new high.
Yeah, pretty volatile stock, but a really strong breakout over a 58.36 buy point. Strong earnings from Live Nation. Of course, they merged with Ticketmaster. I think that was back in 2010. So they own and operate venues for live entertainment, ticketing, but really nice numbers today, and just so many technical breakouts in the market in recent weeks. This is another one, and just a good close up near highs, and pretty clear buy point here of 58.36. Again, 10 cents above the high of the left side of the consolidation there.
That's right, and intraday it became extended from that 5% chase zone, but it looks like it finished just within that level near the top of the intraday range.
Yep.
And last but not least, taking a look at another name out of the software sector, Salesforce. Those shares holding within buy range ahead of the quarterly report next week. Salesforce has produced many a quarter of strong earnings and sales growth, and perhaps we could expect more of that to come next week.
Yeah, I know. Looking at sales, expected to be up about 25% from a year ago. Earnings even up more than that. But it's really hard to find a technology company with a more consistent track record of growth. I mean, this is a large cap name though that is still churning out 20% plus minimum growth on the bottom line and top line. So we'll hear from Salesforce Monday after the close. It was the focus of the earnings preview column. That'll be an IBD Weekly this weekend, so we took a look at Salesforce as a possible call option trade, and
So how's that trade looking? It's looking a favorable trade.
It's looking pretty decent. It's in a healthy technical setup, near highs, not overly extended, and a relatively cheap trade. So you're kind of looking for low risk, high reward trades, and if you can find those, you're doing pretty well.
That's right. And each week in the IBD Weekly, we have a list of stocks that are set to report earnings, and as of the close on Friday, what that premium for the option would equate to. So it's a great place to find ideas in addition to your earnings preview column.
Yeah, that's right at the bottom of the earnings preview column, B3 in the second section of IBD Weekly, and it's a lot more earnings reports next week too.
Yes.
A lot of retail reports too.
All right, well, we will look forward to that, and in the meantime, be sure you're heading to investors.com for all the latest stock news and analysis, and make sure you're following us across social media on Facebook, Instagram, YouTube, and Twitter for all the latest. Thank you for joining us today, and we hope you have a great weekend.